Markets are crazy and investor traders are even crazier. And some of the stocks that have been beaten out of shape in the last quarter, there seems to be no rationale. Let me take a couple of examples to start the day. The first example is Pidilite net sales, good jump, EBITDA, fantastic stuff. Now, if Pidilite is doing fine for this quarter, do you think Asian Paints will not do well? One more example, and this is of total irrationality. BPCL, the results yesterday were good. Today the stock was down 2.3%. That is on top of already bad trend. Now BPCL has already said that they are finding it hard to procure Russian crude. They have not said that that crude is not available. They can buy from Middle East. And what they have said is there is a pressure of about $2 per barrel if they procure it from a non-Russian source. Let's say $3. This amount is roughly 200 to 250 rupees, maybe 300 rupees. One barrel produces about 75 liters of petrol. That is approximately 7500 in selling value. 300 divided by 7500, you can decide the percentage impact on the P&L. Now Nifty is becoming irrelevant in my opinion. Today there were only two stocks which were standing out. One was Ultratech and the next was Wipro. And while railway stocks recovered a lot today, I have not changed this picture. That is because they are a lot away from their 52-week highs. This particular performance does not indicate readiness for the budget. Volumes also pretty low. Same thing for defense also. The gains were good, especially for select stocks like Bharat Dynamics. In fact, lot of stocks like Mazgaon Dock and all, they calmed down significantly after a run-up earlier in the day. Note that in the last budget, this sector was buzzing. However, there was no major announcement in the budget. After that, this sector crashed. That is why perhaps the investors are a little cautious this time. In the Nugget, briefly, I'll talk about the contract manufacturing concept itself very briefly. And I'll talk about why I feel Varun Beverages is the wrong stock to beat because of Coca-Cola. This stock, in my opinion, right now is looking very valuable, specifically after the fall. Nifty a little less greens or a little more reds. It's looking same right now. At the top we had Ultratech. That is because the results were not as bad as they were expected. And Wipro at number 2, followed by Sun Pharma, M&M and Grasim. Specifically in case of Sun Pharma, I lost lot of money last month. That's because I read the movement a little too early and I bought too early and then I exited too early. After that we had M&M and Grasim, followed by Coal India for a change. At the bottom we have Reliance Bank, SBI, HCL Tech, HUL and Kotak Mahindra. Mostly profit booking, even TCS. After the good run up these stocks have seen, HUL of course, the market didn't like the results. And what most of them missed is what I added, that inorganic growth is happening. What matters is the top line and bottom line. That will grow because they have bought a company. Now next 50 significantly better than yesterday. The index also closed in the green. See here, a percent up for the day, 38 stocks up. At the top, Pidilite India, which I highlighted earlier today, and Siemens, followed by LIC, Zomato and Indigo. At the bottom, we have Jio Financials, Vedanta, Adani Power, IOC and Chola Finance. Note that results of Adani Energy were good. Look at the size of greens compared to the reds. And while it was a good day, I still see a lot of storms around me. The tail was very small. Overall market was good. At the top, we had construction materials, which is Ultratech to a large extent, followed by chemicals, which is Pidilite. Then we had auto. At the bottom, oil and gas, that is because Reliance corrected. And we have banking back at the bottom. Only telecom making money in the top sectors. Fortunes are changing fast, sector leaders are changing fast. It was Nifty weekly expiry, however Nifty was kind of stable and Bank Nifty was volatile. Next 50 was also doing okay, went up and then consolidated. It was Reliance primarily which was leading the indices down today. The cuts in TCS, HDFC Bank, they were not that big. Bank Nifty totally undecided, totally haywire, doesn't know where to go. This sector is perhaps a victim of zero interest. Neither investors nor FIIs and maybe DIs are also losing interest. One of the largest DIs in any case is SBI only. And in the private banking space, the only bank which moves a bit, at least on the positive side, is Karur Vyasa. For a change, most public sector banks were looking green today. Some buying returned to the asset management companies, and BSE, as I had predicted, that was up. KFinTech's result is still not out. If the results of the remaining companies are not very good, then this sector may get forgotten very fast. NBFCs were looking better, however, the buying interest was very limited. Volumes were low only. The big problem is this public sector NBFC pack, PFC, REC, IRFC, IFC. And the reason I say this is indicative of low capex in the corresponding sectors. Not good. IT was looking good today. That was on top of the gains from persistent, which I covered in the Nugget section yesterday. I did mention that it could hit a upper circuit. That was hit, and then the circuit was revised. Coforge also good results. Market liked them. 12% up. Rocket volumes for both the stocks. And somewhere in your diary of long-term experiences, do note down that IT is the place to be in troubled times. This is one learning I totally underestimated this particular season. IT SaaS companies came back strongly, specifically Swiggy 6.3% up. The three red companies in the defense pack, they will take a while to come out of red. That is because they are far away from 52-week highs. Metals look better, specifically the mining companies which got a sigh of relief from Karnataka. NMDC was one big beneficiary today. Brent is up, but the producers don't reflect the sentiment. Overall, this pack of oil and gas companies was not looking good as usual today. Power sector was a little optimistic today, but too early to say if the worst is over. And worst is definitely not over for the renewables. They are spooked by Mr. Trump. And buying returned to pharma stocks today, that too on high volumes. A bit of short covering was visible in the edible section today, but this also was on low volumes only. The non-edibles saw a lot of buying on high volumes, however. The bottom continues to bleed. Kalyan Jewelers red today also. I'm shooting that video a little early today. FII data is not out yet. I would not expect the FII sell to be very high today. Buying return to next 50. This is good for retail. And I found this line very funny. Ultratech Cement net profit down 17%, beats estimate, and share up 4%. Adani Energy, the net profit jumped 73% and revenue rose 28%. This is an important news. If you remember, I always say that this sector is not having any problem right now. Adani Energy corresponds with Power Grid. These are the transmission companies. If transmission companies are doing good, then producers have to do well. You have to produce power to transmit, and for that you need coal. Adani Power has to produce energy. Same with JSW and Torrent. Yes, Siemens and ABB along with BHEL Cummins, they are indicative of capex in power sector, which also I think has not stalled. Stock of the day was perhaps Persistent. In fact, some of my colleagues and friends, they lost money in Persistent. That is because they sold around 10% without realizing that the circuit will get lifted. This happened to me also. The US markets looking good, 80,000, 92,000. Trades for the day, one is I traded in Persistent intraday, reasonable profit 3-4% kinds. I had sold reasonable quantities of MRPL few days back. I bought large quantities of VBL today, and we'll talk about VBL in the Nugget section today. I bought Mazgaon Dock mostly for trading few days. Overall a profitable and investment day. A lot of companies in India, large ones, are actually brands. They don't do the production, at least 100% of it themselves. One example, of course, from past at least has been Airtel, which is a big brand, but they outsource most of their operations to other companies. Earlier it was Nokia, Alcatel. Similarly, example is Britannia Industries. They are big brands in especially the confectionery business. They are the market leaders, but they don't manufacture a lot of stuff themselves. They have tie-ups with large second level suppliers who do the manufacturing just in time as per their orders and agreed rates. One more such success story is of Varun Beverages, which is the contract manufacturer or partner of Pepsi in India. Not just in India, they have gone international also. Pepsi likes the tie-up and they have asked Varun Beverages to do their contract manufacturing in many other countries. This is expanding very fast right now. And now we have been talking about the rivalry between Pepsi and Reliance Group for a while now. That is ever since Reliance acquired the brand Campa Cola. Note one thing that Reliance is not competing with Varun Beverages. Reliance competitor is Pepsi India. Varun Beverages manufactures for Pepsi India. The rates between Pepsi and Varun Beverages are kind of decided or fixed. If Pepsi has to lower their rates because of Reliance, then that is marketing cost borne by Pepsi. That is not pass through cost reduction for Varun Beverages. Reliance, on the other hand, there is a brand called Reliance Retail, which is selling Campa Cola, and the manufacturer there is Reliance Consumer Products, which is a subsidiary of Reliance. Eventually, the cost pressure here goes to Reliance Group. The subsidy is borne by Reliance Industries. Here, the subsidy, if any, is not borne by Varun Beverages. Also, if you note, people who like Coke, they don't drink Pepsi, they don't like Pepsi. People who like Pepsi, they don't like the flavor of Coke. It is very hard to change the brand you consume as a beverage. That's because taste buds refuse to change their liking. In fact, in many modern homes, you might see 2-3 brands these days because someone likes brand A, someone likes brand B. Maybe not even in the same umbrella. Someone likes from Coke, someone likes from Pepsi. Most of the Pepsi products in India are manufactured by Varun Beverages. Cream Bell is not Pepsi. This is Varun Beverages brand. They also manufacture the fast food like Lay's, Kurkure, Doritos, etc. in India. Note that if your kid likes the yellow packet of Lay's, they will not consume the green one. There are enough people manufacturing something like Kurkure and Cheetos right now. Now coming back to rivalry of Reliance and Pepsi, do you think Amazon would be happy to sell Campa Cola? For the margins they have right now for Campa Cola, which are negative margins, they will have to bear the cost of selling it on quick commerce. I tried to find it in my location. I could not find it at any location right now. Zepto, Blinkit, Flipkart, Amazon, DMart online, no one had Campa Cola. Some of them had it listed but out of stock. One more reason for that is Varun Beverages went for a QIP recently and they are now expanding globally. They have expanded into 2 more countries in Africa. Whatever share they will lose in India, they will grow a lot more in Africa for now. The money could have been in India. One thing most people are not aware of, there is a brand called Devyani International. This brand was earlier on managed by Varun's sister Devyani. About 3 to 6 months back in one of the board meetings was announced that Devyani International also will be managed by Varun henceforth. All these brands right now, they of course serve Pepsi. One loss for Varun Beverages right now or Pepsi right now is that Domino's owner Jubilant has acquired Coke's India business and they are no longer serving Pepsi, they are serving Coke. That's a loss. However, note that if you order from Pizza Hut or Domino's, most people don't buy expensive Coca-Cola or Pepsi from these brands. They order it from Zepto for normal price of 20-30 rupees. Overall, over the years, I see synergies. Maybe Devyani Group will merge with Varun on some day. And looking at this particular expansion and the cash flows and QIPs, this group could get into more stuff at any time. You might see organic and inorganic, a mix of both grows very soon. If you see the numbers of Devyani, in about 4 years' time, they have more than doubled. In this particular mode of growth, EPS and profits are of course not there. This is an investment phase. Varun Beverages, last quarter, September, people compared it mostly with June, saying that it is a Reliance factor. This is not the case. June has always been higher because of summers. This number was exceptionally tall. And December quarter will be the lowest in the year because that is the cold time. They will be better than December 23. And if results were not expected to be good, then FIIs would not have increased their stake. This is my barometer test. Varun Beverages is right now a dangerous stock because Campa Cola, the group is backed by most of the news channels. The group is same, the Reliance Group. They are the owners of most news sites as well as Campa Cola brand. So the marketing push for Campa Cola is extraordinarily strong. So tread with caution. This video is only for educational purpose. Don't buy it because I bought it. It is a dangerous stock. Right now my holding has become large. I am holding 2000 stocks of VBL. This is very large for even my appetite. Let's see how it goes. I am happy to take risks. Thanks for watching and I will see you tomorrow.